Ladies and gentlemen, what you are about to watch is a conversation that I had with the great Stephen Fiorillo. We talk about everything from SoFi Technologies' earnings results, as well as Stephen Fiorillo's big belief that SoFi might be the best performing stock in his entire portfolio. So please, without further ado, if you guys want to help the channel, just give it a like, but aside from that, enjoy the video. How was SoFi Q4 numbers?
They didn't hold anything back. They hit the ball out of the park. And looking at the expectations for 2023, I think they were very strong, especially since nobody is considering student loans being a significant part of revenue in 2023. So I'm very happy. Let's talk about Captain Noto, putting his money where his mouth is and continues to be super bullish on the company. And he's purchased almost 2.2 million shares. I think he's allocated roughly 11.3 million of his own money since SoFi went public. So I believe in 2021 he purchased SoFi 4 times, and in 2022 I think he did 20 purchases or so.
Yeah, something like that. You even have
Yeah,
written in
20
your article
individual
that,
purchases.
wow. And he even lowered his cost per share from $14 from 2021 down to $5.18 is what you have here on your
It's
article.
crazy. Yeah, it's really crazy. And you look at the green chart that we were talking about the other day. I mean, his purchases were 1378, 1446, 1393, and 1431. And he purchased 7,150 shares in each block. So, I mean, he went on a buying spree. And look, that's a bullish signal. And that's what you want from a CEO who's determined and believes in the company. He's only buying for one reason. He thinks it's undervalued. And look, nobody should buy just because he is, but it's definitely sending a bullish signal that he believes that the company is undervalued and it's going to do great things.
He's been purchasing heavier than he ever has, like really, really big blocks of purchases. So I mean, that's absolutely amazing. But how many stocks do you follow where you see this level of insider buying?
Energy Transfer is probably the only one with Kelsey Warren, and a lot of unit holders of Energy Transfer don't like to speak about Kelsey Warren. They feel that he has done them wrong. But if you go to Open Insider and you start looking at it, he has purchased a tremendous amount of Energy Transfer shares over the years. That's the only one that really comes to mind.
CEOs and CFOs that purchase their own company is a great chance that they're going to outperform the market, which I thought, really, really interesting that Mr. Noto in this small company is putting a lot of his, a lot of his income towards this company, way more than what he's making from SoFi alone, right? This is previous salaries and different payouts from different companies.
Well, you got to look at it this way: who has the best beat on the business? So you see those two positions buying, you see board members buying, another C-level. It's usually a bullish sign.
People don't talk about that nearly enough. Is like the information that analysts are getting, or portfolio managers, is so far behind, and only an abstract view of what Chris Lapointe or Anthony Noto is probably getting a behind the scenes look at in terms of not only their own company statistics but also the industry and everything along these lines. It's phenomenal. But you don't like these aren't the only two companies that you track. You track, I don't
No,
know,
I track a lot of
50
companies.
yeah, every single company I bring up, you seem to know something about either their balance sheet or what they do most of the time. And these are the two companies that you can think of in recent times where you're seeing this heavy of purchasing from insiders.
Purchasing, yeah. I mean, look, Elon Musk obviously owns a huge block of Tesla, and that's not what we're talking about. We're not talking about CEO ownership or founder ownership of a company. We're talking about strict purchases. And the only other company that comes to my mind of this level is Kelsey Warren with Energy Transfer. And there could be others. They're just not coming to my mind.
That's another thing too, right? Is that it's not that these CEOs don't have additional options where they have, large amounts of shares. This is the money that they're putting on top of their already pretty concentrated bets in these stocks. It's because they have, overconfidence in this working out.
He has RSUs, as Chris Hager pointed out, that he gets handsomely rewarded if the stock goes to 25, 35, and 45, I believe were the metrics. So, or whatever the metrics were, as to be a 90-day average of that, he gets handsomely rewarded. And we're talking about a lot of capital. He doesn't need to purchase shares. If he reaches those metrics, he's going to have a ton of money coming to him. He is still buying more and more shares. I
Right.
don't see how you take
Right.
that as anything but bullish.
Yeah. No, and that, like, it's something that I address a lot in my videos because it's obviously something that's a standout compared to just public markets. It doesn't seem to be the norm that that CEOs are buying so aggressively. Even as the stocks are being, depreciated so much, we're not even seeing that much insider buying. It does happen. You can follow it on, websites like MarketBeat and these sorts of things. They'll track all the insider buying and selling for, a myriad of different public companies. But still, it's absolutely amazing that the stock that I cover, the stock that Steven covers, is obviously seeing a great sign there. But in your article, you also spoke a lot about, SoFi, even as a bank, right? Deposits were a big issue in your article. Members, revenues, products. We're going to be talking about it all. But what did you actually think about the technology side? You didn't talk too much about it in your article. Is it something that you're still super excited about, or is it kind of losing steam?
Not losing steam. If you want me to write a 5,000 word article, I'm happy to do it. I find
I do.
that when I start talking about the technology side of it, the articles become so long. I don't think that it's a good use, especially since this was a annual review. I've written dedicated articles on the Technesis acquisition and the AWS of Fintech, and I'd rather do dedicated articles on those, which are the only focal point. I think when we have numbers about other areas, it just becomes too much for a single article. But I am not losing steam on it. I think that still to this day, after the Bank of America interview that Anthony Noto gave, after the things that Chris LaPointe has spoken about at, I believe, the City Conference and some of the other ones, that people are still underestimating or not investigating what the AWS of fintech actually means, and they think they're just saying it as a buzzword because of AWS with Amazon is crazy. I mean, this has so much future potential. I don't think people actually understand how archaic the traditional banking system is. And most banks don't have a full cloud premise and don't own their back end. SoFi, with the acquisition of Galileo and acquisition of Technice, own the entire back end, which they are slowly transitioning to, from the Cyberbank platform to all the payment processing. And with their bank charter, they have a full 360-degree AWS style of fintech, which they will utilize on their own. And then they can package that in a pretty little bow to any of the neobanks or traditional regional banks, thrift banks, or even the big players. And my belief is they're going to pick up a significant amount of customers on their full platform that they are going to host. And their selling point is, this is what we're using. We built it to work the way we want it to work. You can customize it. We can build everything the way you need it. We own all the back end, so it is not waiting for things to come on a roadmap. I'm very bullish about it. I still think it's going to take several years to really play out, and it could be more than several years to really play out, but we're going to start seeing this year the real savings from transitioning all these things. But this is a huge revenue opportunity outside of everything else SoFi is doing that doesn't get the credit it deserves.
No, 100%. And I think another really important part of that is that, one, the acquisition of Technisys was supposed to bring down our margins because I guess they run more closely to the high teens or 20% contribution margins, where Galileo runs more in the 30 areas. So they were supposed to bring it down, but yet like that interview that you were talking about, the Chris Lapointe Credit Suisse interview, is that he actually said that the combination of these two companies over the next couple of years is actually going to bring the technology platform contribution margin up to 40%. So not only going from Galileo's high 30s up to 40%, that's a 33% increase in the contribution margin. That could absolutely be amazing, even with the existing clients that we already have, let alone however many people we're actually going to be selling to. No,
And I
I'm
just pulled up while you were saying that the presentation from that transaction. I want to read something from it. So in the transaction overview, add a cumulative 500 to 800 million of revenue through year-end 2025 at high incremental margins. Create approximately 75 to 85 million in cumulative cost savings from 2023 to 2025 and approximately 60 to 70 million annually thereafter. So not only is this adding revenue on both lines of business now, not only is this building out a full platform that will generate revenue in the future, it is also a cost savings that is going to be with us in totality. I mean, we're going to see 60 to 70 ongoing after 2025 by doing everything in-house. And that goes right to the bottom line.
And I even forgot about that it's actually starting in 2023. So we're expecting to see those cost savings already, which probably means some of our platforms, whether it's our credit cards or, the invest products or whatever, that's already started to get transferred over to the Cyberbank platform. So that's going to be quite interesting as well.
Good things are
Um,
coming. And don't forget, we didn't pay a single dime for the Technesis. It was
mhm.
all stock. And people say, but you got diluted. I'm willing to get diluted for this. I was very happy with the transaction. I'm still very happy with it. And it is a transformational because SoFi has the bank charter, they can sponsor banks, and they can generate a significant amount of revenue because when Galileo is in there or Technesis, they can now cross-sell to both. And if they happen to need a bank sponsor, SoFi has that also. So it really is a full trifecta on an AWS of Fintech.
And that's another thing too. If we got diluted back in the 14 or $13 ranges, whenever the Technisys acquisition actually happened, buying shares today in the $6 ranges still feels like a massive blessing compared to where we actually diluted from. So,
Over
absolutely
time,
amazing.
the deal pays for itself.
Like you said, there's so much cross-selling even in between our own business, between Galileo, Technisys, and SoFi, even as a bank, with us using their products and then them selling, all of the products that we know over to other banks. If you had to pick one of these businesses, what are you most bullish about? Are you bullish about SoFi as a bank, as a lending platform, or are you very excited about, Galileo, Technisys, and the idea of the AWS of fintech?
I would say it's the bank for so many reasons, but mainly because it brings the cost of capital down and it gives them a level of credibility that is just worth its weight in gold. I mean, really think about what that symbolizes, that the OCC through the Fed granted them the bank, national bank charter. They're no longer borrowing from warehouses. They can utilize the deposits on the balance sheet to fund loans. Whether they hold them on the balance sheet or not, that's a whole separate conversation. I think that that would be my most bullish portion because also that could have been one of the big things to really get member growth continuing to move in the trend we want because of the credibility. Prior to being a bank, some people may have been hesitant, but now there's nothing to be hesitant about. They are a full-fledged national bank. There is no
Yeah.
reason to doubt anything. And I just think that when you're going for a loan, you're going to use any of their financial products, you're going with SoFi Invest, or you're just using it for savings and debit, it just gives it a level of credibility that is worth so much more than if SoFi did not have the bank charter. And I do think that that's the most important aspect of it.
In your article, member growth. Is the bank actually growing at the speed that you want it to? We added 480,000. Actually, that was a roundup. I don't know if you saw the SoFi Weekly podcast where we made member predictions. I had predicted exactly 479,000 new member ads, and I was 800 members off from the exact count. So I thought that was kind of funny. But yeah, what did you think about adding this many members? Do you think that they were more just trying to prioritize profitability? Are you happy with the amount of numbers? What do you think about the growth rates year over year, declining slowly? Is it a bad thing?
Everybody likes to say it's a bad thing. Everybody, all the bears like to say it's a bad thing. I got news for everybody. When you grow and when you become a bigger company, it is harder to maintain higher growth rates. I mean, you can't maintain 113% year over year growth rate like they did in Q2 of 2021. It just, no business sustains the growth rates from when they were a younger company indefinitely. Unless somebody wants to come back and say, well, Tesla is projecting 50% average annual over the next couple of years. Okay. But eventually, if Tesla hits that, eventually Tesla's not going to grow at 50% average annual. Eventually, those growth rates are going to come down. It is harder to grow when you get bigger. And SoFi's members are still growing at 51% right now. I don't think that's anything to be annoyed about. They finished the year with over 5 million. And if we keep going at this rate, what, 10 million by sometime in 2025?
It's a crazy thought to think. I was looking back at some old videos that I was covering of SoFi, before, and I think they had 2.9 million members or something like this. Absolutely insane. And then on the other side, products are actually growing faster than members. Not as much, or not much more, but where we saw 51% growth in members, we saw 53% growth in products, and there's more products per member, which is increasing monetization.
I don't even know
I
how you get to 7.9 million products. I mean, I can't think of all the financial products that is. It's remarkable.
Well, it's a heck load of people with SoFi Money, SoFi Invest, and Relay actually too. That product's growing like crazy. So everyone's seeming to want SoFi Relay. Do you have any? Did you ever look into SoFi Relay or SoFi Relay? I know you're not mainly an individual product sort of person. Whenever you look at this company, you're more looking at an overall company. But do you think that this is an amazing cross-selling tool? Do you think that that is still SoFi's flywheel, is that we can sort of get them in on our cheap products and then eventually be able to build out a relationship with them where we eventually get personal loans and home loans and these sorts of things? Or
I,
what
I
do you
think
think the
that
business is going to be?
I think the flywheel stays intact. I think that when you have members that like the product, and if you do the right thing by the customer, it will be their first place to go to get a loan. Anthony Noto has said it best. You can't say it any better than he has said it. They want to be there for everybody's major life events. I am not their demographic. Their demographic is much younger people than me. When you capture high school kids and college kids getting their first job and with the deposits, and then needing to get a car loan, needing to get a mortgage, refinancing student debt, paying for a wedding, whatever the life event is, taking personal loans for home improvements, whatever it is. If they capture the members from a young age and make everything a simpler process than going to a traditional bank, taking the complexity out of it, the annoyance out of it, I think they're going to win over the younger generation, because the younger generation is growing up in an age where everything is convenience factor. Everybody's attention span has decreased and everybody wants instant gratification. And I think that's something that's lacking with the other banks. And I think it's something that SoFi's capitalizing on. I think it's something they're going to do better than everybody else.
Obviously, we're in a really particular situation right now where a lot of these large banks, like you've shown off, their deposits are decreasing at a lot of these places, and SoFi seems to be there to pick it up faster than anyone else. Do you think that large banks over the next 10 years are going to continue to sort of not be able to perform as well as SoFi because of these things like average yields in the checking accounts and these sorts of things, where it's more customer focused, convenience? Do you think that still plays out to be the most likely trend in where SoFi is going? Or do you think that, the safety and brand reliance of these big banks like Bank of America are still going to make them, household names?
My opinion is the big banks are not going to just fade away into the night. The big banks are still going to be household names, and they're very good at what they do. The difference is, walk into a big bank in New York City. I walked into one the other day. The first thing that I thought of when I walked in was the square footage of this place is huge. In the middle of Midtown, how much is it costing them to operate this space? SoFi doesn't have that overhead. Now, it's a good and a bad thing. You get the name out there. People walk by the bank all the time. It's right there, convenience. But we're moving into a digital world. So how many people actually go to the bank to get cash? I would think it's less and less. Now, I don't know. I don't have any statistics on that. That's an opinion. But I don't know why people are drawing down on deposits from all these big banks. I didn't look into that. I have no idea. What I do think is SoFi is going to pick up a lot of business. I think it's going to continue to grow. And if you are a younger person who does not have any ties to a bank, why on earth would you open up a checking and savings account with one of the traditional banks, which will remain nameless, that give you 0.1% on interest? Now, individuals such as myself may have a harder time switching over, or people older than me, because your entire life is with that financial institution, you have everything set up, and it's just a hassle to switch. Now, people who don't have those issues and are just looking to start out or looking to open up a new account, why wouldn't you go with SoFi that's giving you an aggregate of, I believe, what, 3.75 if you do direct deposit? It just doesn't make sense not to do that and then just set your life up through that. And I think SoFi is very smart in the fact that they are going cloud first in the digital space, because they're not going to have the thousands of branches on overhead expenses. So they're going to be able to keep the spread high on interest. And that's something that the bigger banks just aren't going to be able to do. If they were
Yeah.
able to do it, they would have done it already.
You know what, you brought up so many points there that are really important. Not only is it the real estate fees, it's also all of like the head counts have to be so much higher at all these physical locations. And then, so what are the big fees that SoFi has to pay for? Well, it's the cloud setup, it's the core infrastructure for the actual bank, and it's the issuer processing, which are all internally owned through Galileo, Technisys, and all of these things, which are expected to save us so much money. And then not only we can get that process so good that we can also sell it to other neobanks and get them set up, right? So it is a beautiful strategy. And like you said so well, is that a lot of these people with traditional banks don't want to switch over because there's a lot of stickiness in banks. You have a great relationship with them where you might know the people there or the systems there, or it's just comfortable, and a lot of the products are there. But that's the same thing with the people that are getting signed up with SoFi right now, is that even as competitors come down later down the line, the relationships that we're connecting with these people, with direct deposit users especially, are going to be very sticky, clients. If I could just bring up one more thing in your article, whenever you were talking about deposits are growing like crazy. The average member deposit, which is a statistic that you show, is just climbing like crazy. Almost 400 average ads every single quarter, going from 300, 600, 1,000, 1,400. These clients are obviously using us more and more. 88% of the overall deposits come from direct deposit users. So obviously they're using it, and 50%, I don't know if you remember hearing this during the earnings call, 50% of the people that actually have a SoFi Money account are setting up direct deposit in the first 30 days.
The growth is spectacular. People are depositing more money in there, and you want that number to grow. You don't just want deposits to grow and members to grow together. You want the average member deposit to grow also. And that's what we're
Right.
seeing. It's a great statistic that not a lot of people talk about.
What is the cross-selling factor of these same people, like I already said? But SoFi Money, if you already have the direct deposit, you're in there every single day. Most of your bills are being paid through a direct, like if you have a primary relationship with your bank, this is usually where you're setting up all your bill pays and these sorts of things. And then if, for example, you start getting into investments, or you need a home loan or something like this, that might be the first place, because data is getting so well, they're going to know that you're shopping for a home, right? They're going to have this data, and they're going to start offering it to you. They're going to place it right on the front page of the home screen, instead of just going in and having a broker actually see learn about you. These are expensive costs for a traditional bank to get the same service that SoFi could just promote to you for free.
Look, the younger generation doesn't want to flip and forth between different apps and different companies and waste their time. They're used to everything being instant gratification. And if SoFi can continue to create a great product that's engaging and make everything easy, there's no reason to even shop around unless you just want to see if you can get a better rate from somewhere else. If SoFi is going to be competitive, which they should be because they currently are, I mean, it's just much easier to keep everything in one place. And I think that that's really what they're banking on by creating a product that their members love and being able to provide a financial product for any situation. With 7.9 million products or whatever it is, they've pretty much done that.
What do you want to see next from SoFi that might further your bull thesis, or potentially new products, new paths for them to take, new metrics that you want to see? What do you want clarified? These are some things like future looking.
Difficult because I think Anthony Noto and Chris Lapointe do a hell of a job clarifying everything. And I don't know if they could do it. And I know I sound very bullish and just that I don't think they can do any wrong, but for the people such as you and myself who actually listen to the banking conferences, they do an exceptional job of spelling everything out and going through an enormous amount of detail on how everything works and what their plans are. So I think it's more, I wish that the investment community would take more time to listen to the conferences or at least read the transcripts. And I wish that we could get Noto or Chris Lapointe on SoFi Weekly. I think that would be great. But I would really like for them to put something out on YouTube, just some type of just Q&A, and just go over all these different things. Just a dedicated thing, nobody asking questions, just really go over it for the shareholders and for people who are interested in the company. But to answer your question, I want to see student loans come back. This is a company that was predicated on student loans. They were a refinancer of student loans. It was their core business. Got taken away from them. And in the face of adversity, they had to develop other lines of revenue to survive. They had to do a complete pivot. And they proved to me, and I hope everybody else, that this is a team that no matter what is thrown at them, think about taking your biggest business and putting it on ice, and then having to do something to pay the bills and keep the company growing. They did everything in spades. So when student loans come back, and I don't think it's going to be 2023, I think that if it does not, best case scenario right now for SoFi is the student loan plan that President Biden put forward gets passed. The $10,000 to $20,000 for Pell Grants gets reimbursed and erased, and then the rest gets originated and starts paying again. That is the best case scenario. And some people are under the impression that forgiving student loans is bad for SoFi. It's not. What is bad for SoFi is this being prolonged and nobody refinancing student loans. If you have I don't remember the number, 70,000 is sticking in my head that was the average. I could be 100% wrong on that, so don't quote me on that. But let's use 70,000 as a hypothetical. If you have 70,000 in student debt and you are not on the Pell Grants and you get 10,000 deducted from it because you make under a certain amount, I don't remember what the threshold is, you still have to pay back 60,000, which you may refinance because you may get a better rate than what you're currently paying. If you do have a Pell Grant and you get 20,000 deducted, you now have to pay back 50. Same story. Best case scenario for SoFi is student loans come back in 2023 and we start seeing the refinancing and the originations pick up again. This is a business line that in Q1 of 2020 was over $2 billion of originations. In Q4, under 500 million. I mean, significant drop off. And when I look at total originations, 2022 was the largest year for loan originations. Personal loans almost reached 10 billion. Student loans dropped off the face of the earth, and so did home loans because of interest rates. So what happens to originations when student loans come back and then the Fed actually pivots and brings down rates, whether it's sometime in 2023 or sometime in 2024, and there's more activity in the home buying and selling in the mortgage market, and more home loans are coming to the market. When we see total loan activity across the board go up, It's going to be great for SoFi. So I think that's what I'm most waiting for right now. But the AWS of fintech can't come soon enough. But I think it's 3 to 5 years off before we really see gigantic booms in it. I don't think they do a good enough job hyping up Galileo. Hyping's not the right word. Discussing Galileo, making everybody aware of how important Galileo is. And you've done some great work on this, and you've showed the 200, was it 200 trillion opportunity?
Yeah, exactly. The B2B, that's just the B2B
B2B.
opportunity.
Yeah. There's a lot of opportunities out there for Galileo. And when people go to Galileo, customers go to Galileo, got that cross selling that we always talk about with Technesis and other platforms. So it's big.
Yeah, you even said, I wanted to bring up this quote from you, but you even said, some may disagree with me as you were talking about student loans, but you said, I'm happy that SoFi faced tremendous adversity with the student loan business. I guess this was, SoFi's first recession in a way. They had to completely redo their business. And in that way, whenever real adversity comes the way it will come for every business, we have strong leadership in there that we know that will be able to pivot to potentially a stronger business model or reallocate capital in a way that we could survive or even thrive in a different market. So I completely agree.
People are short-sighted. I'm going to say something that people may not like, but it is what it is. I invest for the future. I try to invest for 5 or 10 years out, if not longer. And I invest money I can afford to lose. And I don't care about being in the red for 6 months or a year and a half. It doesn't faze me one bit. And some could say, oh, how could you not care? Put a stop loss. I can't time the markets. Okay. I'm not that good. I can't time the markets. And I don't know many people that have the time to actually sit there and look at a chart for 8 hours a day and play that game, or anybody that's actually good at doing that. And I know there are people that do it. And I know there are people that make a lot of money doing it. I don't try because you know what? It's not something I'm interested in, not something I want to do. And I don't even know if I would be nearly as successful as some of the people who are successful doing it. And I'm in the red right now in SoFi. I sleep fine at night. I don't care one bit. I just buy more when I can. And I dollar cost average because I see the future potential. Now, if my investment thesis changes and I no longer feel the same way, I will sell some covered calls at a certain price. And then if my shares get called away, they get called away. Or if something's really bad going on, then maybe I would just sell my shares. But that's not what I'm seeing. So I'm in this for the long haul, and being in the red does not faze me one bit. I'm invested in a lot of different companies. This is just one investment. And look, people shouldn't invest money that they can't afford to lose. Too many people invest and go all in on one individual stock, and if it doesn't work out, it seriously impacts them. That's not investing, that's speculating. Two different things.
Well, in that same regard, you said, I feel that SoFi has the most upside potential out of any position I own.
I mean, look, I can be wrong. If it doesn't work out, it would suck, but I'm okay. I'm not putting all my eggs in one basket. That's reckless investing. That's
Yeah.
gambling. If I wanted to do that, I'd probably have a much better time going to Atlantic City and playing craps, not looking to put all my money in one stock. Look, I still think so. If I could be a 10x, that puts it at roughly a $65 billion market cap. So 65 billion, they could get there in the next 10 or 15 years. I said that the other night. I don't see why they can't unless something changes. Show me another
Yeah,
company that has 10x potential in the next 10 years.
I agree. So what are you worried about for SoFi? What are some bear theses that you think might actually hold some clout? What could tear us down?
Not worry about anything. Not worry about anything because the numbers are going the way the numbers should be going. You look at the annual adjusted EBITDA, it's gone from negative 149 million to positive 143 million in the past 3 years. I need to bring up the income statement right now. So give me a second because I don't want to give a bad number. And people will think, oh, he's crazy. He's not worried about anything. Well, until they give me something to worry about, I'm not worried. So if I look at the quarterly income statement, SoFi's net income was in Q1 of 2022. I'm going to go on a quarterly basis. It's gone from losing 110 million to losing 95 million to losing 74 million to losing 40 million. So we're at negative 40 million in Q4. Tanner, what is 40 times 4?
160 million.
Okay. So if we stay at 40 million loss each quarter in 2023, we'll lose $160 million. Okay.
Well, if I could add, that's in GAAP net income.
Yeah. GAAP net income.
Yeah, not even non-GAAP, which would
No,
probably be that we're in
I am
positive
talking
earnings.
GAAP. I'm not talking adjusted numbers. GAAP net income.
Mhm.
How much cash is on the balance sheet? 1.42 billion. Okay. We also have another 396 million in long-term investments. So between the two, roughly 1.8 billion in current liquid accessibility. If we were to lose $160 million, barely puts a dent in the on-hand liquidity that SoFi has. Now, they won't lose it unless something changes, because the numbers keep going in the right direction, and SoFi is projecting they're going to be net income GAAP positive in Q4 of 2023, ahead of schedule. So SoFi grows members, SoFi is growing revenue, their adjusted EBITDA and their net income is growing, their brand recognition is increasing. We haven't seen student loans come back yet. I can't predict if a credit crunch is going to happen, but you know what? I don't even really believe the next person can. We haven't seen it. I don't believe we're in a recession. Can't have a recession with the unemployment numbers that we have, and you can't have a recession when GDP is growing. Sorry, go take some economic classes. You can't. That is not how a recession works. So the other part with the credit thing is SoFi only lends to people with the highest quality scores. What's the average FICO? Is it 745 or 768, something like that?
Yeah, 747 on personal loans, 165,000 of net or of annual income.
Annual income.
So
So if there is a credit crunch, SoFi's in a great position. So all the bear thesis is out there, I don't subscribe to. And I'm not saying they can't happen. And I'm not saying listen to me, because I think these are all my opinions. But when I'm asked, what am I worried about? Until these numbers start trending in the wrong direction, SoFi is not giving me anything to worry about. So I'm not going to sit here and worry about things that are a figment of my imagination right now. I am aware that these things could happen, but I think it's not probable. And I make my investments based on what is probable, not what I know is going to happen, because I can't predict the future. But if I have a choice of, is it more probable that we're going to start declining, or more probable that these numbers are going to continue to trend upwards? I think it's more probable that they're going to trend upwards. So there's no bear case that scares me or even gets me not wanting to buy more shares. But that's just me.
thanks for coming on the SoFi Weekly last week. That was a lot of fun as well. But I'm going to leave it at that.
Sounds good. Thanks for having me.